Hey guys, Phil from Professional Lending Solutions. We're getting a lot of inquiry at the moment around investment property, so we thought we'd just shoot this quick video today just to give you a bit of information and answer a lot of questions that we're seeing. So the first question we obviously get is, why should I buy an investment property? First of all, obviously we're not financial advisors and we're not really giving advice. We're just sort of talking from our experience and what we see our clients doing at the moment. A lot of them are just sort of thinking into the future. It'd be great if I have this asset that is paid off over the next sort of 20 or 30 years, and then in retirement, we've got this either asset we could sell or we've got this extra income stream coming in. The second one is, they may have got tax advice from their accountant sort of saying, hey, we need to get some tax deduction in there for you. So often they're buying that so they can use that property as a deduction. And the third one is using that investment property to help pay off your own home sooner. Around using the cash flow generated by that investment property to get rid of your debt over your own home. So a lot of times we're going to work with your accountant on that just to make sure they're fine with the structure and make sure it's going to achieve all your goals. How does your rental income contribute to your application? Well, basically the bank will look at what income you're going to generate from that property. They'll add that to your normal income and then calculate that based on the loan you're going to get, whether that services. Another benefit around that investment property is the banks often look at the tax advantage you're going to get of having that investment property, and that'll really, they factor all those things in when they work out how much you can afford as an investment property. What's the benefits of old properties versus new properties? First of all, with older properties, you'll find these are obviously more established areas. It's probably an area you may know a bit better if you're looking locally. So they can be in a better location. You may get a better deal because there's a little bit of work to be done there. And on the third point to that is then you may be able to renovate these properties, add some value to it and get some really good capital growth. New properties, there's a lot more sort of depreciation and tax sort of benefits around some of that stuff. It's just recently been completed. There is less maintenance. Obviously, newer house, it's going to be covered under warranty for a number of years, and then you'd hope that a number of those fittings and fixtures will last a lot longer than the one in the older house. The third one is, often it's easier to rent out that brand new home than it is, with an older one that may need a little bit of work. So you may get a bit of a premium on the rent because it is, a brand new home. Okay, so how much deposit or equity do you need to buy that investment property? Typically as a rule of thumb, the minimum you really want to look at is about 10% of the cost. Most banks won't lend above 90%, even with lender's mortgage insurance, to buy an investment property. So you need to have at least that 10% equity available, on top of the equity near your own house, or that cash. Okay, rent vesting. So this is something that's talked about a lot at the moment, and this is typically where you don't own your own home and you're buying that first property as an investment. The benefits here are, one, you're getting in the market a bit sooner because we can actually use that rental income to help service that loan. Typically this might be because you're at home, you've got cheaper rent at home, or you're sharing with other people and you don't want to go and commit to looking after the whole loan yourself, so you're going to use that rental income to help pay off that loan for you. In that situation, you're still getting the tax deduction, so you're still going to have those benefits as well, and hopefully soon down the track you'll be able to use that equity you've created to buy your next property. Things you do have to remember, if you're going to buy that house as an investment, sometimes the interest rate's a little bit higher as an investment. So sometimes to mitigate some of these things, what clients will often do is actually move into the house, for say the first 12 months, and then they move out of that property and then it becomes an investment property. So this obviously helps you to get sort of that sometimes better interest rate, better options around owner-occupied loans, and then that property will still be there as the tax deduction. Yeah, so one that's come up a bit at the moment is, can I buy a commercial property as investment? And the answer to that is yes. So there's a number of options and lenders we work with out there. One thing is though, you probably need a bigger deposit, than the minimum we've talked about previously, because commercial loans are typically at a lower loan to value ratio. So once we catch up, we can talk you through all these options and what those options look like. The other costs involved, buying an investment property you need to think about is just typical things like your conveyancing, for the purchase, you got your building and pest you need to do. You want to make sure that this property, you're buying as an investment isn't going to turn out to have a lot of dramas that's actually going to, financially affect you down the track. So you've got stamp duty on the purchase. You've got to remember that's a little bit more than normal stamp duty because you don't get the concessions when it's an investment property, but we can do all these calculations for you and explain them to you. You've also got some transfer duty you got to pay And as we said, depending on whether you've got a 20% deposit or less, then you'd have to pay lender's mortgage insurance on top of that. So I said, whenever we sit down, we can go through all these costs with you and show you exactly what it looks like. And if you do have enough equity or cash to be able to buy that first investment property. Okay, so the $1 million question I get all the time is, where should I buy that investment property on the Gold Coast? First of all, I would say, if it's an investment, don't just limit yourself to your local area. You've got to look, whether you're comfortable to go, a couple hours away, where is a good choice for you based on whatever your budget is and what you're looking for. Sometimes you find in some of the fringe areas, where the prices of the houses are a little bit lower, sometimes the rental yield can be actually quite strong versus the cost of the property, whereby some of the more established areas where there might be more expensive houses may not get the same amount of rent against the cost, but sometimes they have higher capital growth. So you really have to balance that and really try and then hunt around a wider region, whether you're on the Gold Coast or Brisbane, that might be somewhere in southeast Queensland, to sort of find, a property that suits your needs. Remember, you don't need to live in this house. It's not about you and your lifestyle. It's about what is the best investment. So try to take the emotion out of it. You don't need to picture yourself in it. You just got to picture whether you're going to get good tenants in here and are you going to get a good, rental return and capital growth for the future. Why should you work with a broker versus going directly to bank? Well, the number one reason is always going to be choice. We have over 30 lenders on our panel, and you'd be amazed the difference one lender will lend you on an investment property versus the other. We'll find that someone might have one house and investment property, and the difference between two lenders might be $400,000 on how much you can borrow. Everyone treats the income differently, your income differently, any of the rental, any of the depreciation, everything's very different. So, we've got obviously access to that to say, based on this is gonna be your best solution. You only get one chance to get that right, so it's very important that it is done the correct way the first time. Okay, so again, thanks for watching the video. I hope we've answered a lot of your questions on investment properties and what your options are. Touch base with us. Always happy to sit down, talk to you, show you exactly what your options are. Remember, the video today has just been general advice. We haven't really looked at any of your specific details. So we're just sort of giving you some advice on what other people are doing out there and what your options might be. So thanks a lot. We'll talk to you soon.